All right, welcome into another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, we just moved from March to April, so we have a monthly close to talk about, which also lines up with the first quarter close. Now, both of these are, yes, longer-term charts that we're going to be looking at. We will mix in some shorter term comments, but paying attention to these longer term charts is very important. Let's start off with gold. Now, gold had a pretty massive candlestick just for the month of March. I think the total moves from high to low that we saw were about $250. It went from a high of about $1,700 whole way down to that $1,450 level. Talk about crazy moves in 1 month, testing upward resistance and lower support that is a quite wide range. Now, Jordan, what do you have to say about how gold closed with a little bit of sell-off into the end of the month, but still trading in this upward pattern that started in about mid to late 2018?
Yeah, hi Corey. There's nothing wrong with the quarterly chart for gold, actually, but the monthly chart is a little concerning when we pull out the candles, and it's just because the last 2 months we see that the market basically tested 1700 both times and then closed well below it. So this is not the monthly chart of gold does not suggest that gold is going to break much higher in the next month or two.
So does this mean that we need a little bit of sideways movement, maybe a little bit of consolidation, pulling together these Bollinger Bands? Because quite frankly, these Bollinger Bands haven't been this wide since about 2014, when gold was traveling pretty aggressively down.
Yeah, it's very possible. I mean, I like the fact that gold quickly was able to rally all the way back to 1700. I mean, that was encouraging for me because if you go back to 2008, it had that big rebound in September before the ultimate bottom. It rebounded strongly, but it wasn't able to come close to its previous high of 1,000. I think it got up to 940 or maybe 960 or thereabouts. And so I like, looking at the weekly and the daily charts, I like that gold was able to rally back to 1,700. But I mean, my thinking in the last week or so has been, we're probably going to consolidate here because of the sharp resistance at 1,700, because of the miners had rallied up to sharp resistance, and also because the net spec position in gold has been fairly high. It's been elevated for a while. So I would like to see that come down. And assuming we can get that to come down while gold is able to really, Corey, I mean, as long as gold holds above 1450, 1475, I'm not saying we're going to go down there, but as long as it holds above those levels, it's really in good shape. I mean, if we see gold, I think it's 1570s or thereabouts now. I mean, if that becomes kind of a short-term low and gold is able to hold that, we consolidate at higher levels. That's a real bullish consolidation, like a bullish flag that would imply a strong breakout sooner rather than later. The other scenario is it's a bullish consolidation, but gold still it probes lower levels, but it remains well above 1450, and it just takes longer to play out. So, I mean, that's how I see gold.
Okay, so either way, this is still a bullish setup, but time frame is up in the air right now. But you know what? Fair enough. Time frame needs to be up in the air because we don't know what sort of news headlines will drive these markets, because that's what has been driving these markets so much just this year, and especially last month. Let's move over to silver quickly, because all the silver bugs out there are very disappointed at how silver performed this month. Dropped the whole way from about $19 the whole way down to $11.64, which was a level we haven't seen since '09, I believe it was. Now, it has rebounded a little bit, but you look at the weekly chart, you look at the monthly chart, it looks like there was a fair bit of damage done this month. What are your thoughts, Jordan?
Well, that's definitely the case if you look at a candlestick chart. But, monthly charts they're obviously more important than weekly, which are more important than daily. But it obviously takes time for the monthly charts to play out. And so I think, silver, based on the monthly close, it did not break to a new low. And the bullish interpretation would be, silver is making this massive double bottom right now. And this is the end of the double bottom. This is an epic low and a buying opportunity. That could be the case, but obviously we don't know yet. We have to pay attention to the next monthly close, and obviously that would mean we have to wait another month, which is a long time in our world. So I don't like the monthly candle on silver. I don't like it on the miners either. But when you get that kind of a candle, with just it's a hammer, but it's difficult to describe. But basically, when the hammer is really big, but the body of the candle is not that long, so most of the hammer does not include the body of the candle. When you kind of see those types of candles, I think the next period, the next month, you're going to retest some of that huge move that you made. So, I mean, long story short, I wouldn't be surprised if we see silver go a little bit lower into the 13s again. But I'm encouraged because I think that even if we see weakness to start this month, I think that silver could close the month, making another hammer or just closing the month, with strength and above where it is now, and therefore on the the line chart, you wouldn't see a break to new lows. So that's something to keep in mind. Possibly some weakness to start this month that retests a little bit of that weakness, but it closes the month, well below the lows, much like it did in March.
So because silver bounced so quickly after that complete washout when it got down to that 1164 number, is that not as relevant to you then because of the fact of if you look at the line chart compared to a bar chart, it's not nearly as devastating looking?
Yeah, that's a great point. I mean, what makes it significant, Corey, is really the monthly close. So even if it took silver like a couple days or like a week to bottom out before a sharp bounce, it's really the monthly close and also the weekly close, because I think if you look at the weekly chart, I'm just pulling up the weekly chart of silver, there's really only 1 month where it went below $14. So, I mean, if it only closes below it for one period and then it does a V rebound, then that can kind of negate just that one close. But then, as you were saying, it's more, it's not as, that breakdown is not as significant because silver was able to close the month, well above that low. And so when you're looking at very long-term charts, I mean, the close matters so much more than that's all that matters really when you're looking at long-term charts. It's the closes.
Okay, Jordan, one more quick question regarding silver. Do you think silver has a chance to play a little bit of catch up to gold here in terms of, well, I know we can look at the ratio. You hate looking at the gold to silver ratio, but there's no doubt that silver has underperformed. So is there a chance that it can play some catch up here?
Well, there's always a chance. I mean, as far as here and now, immediately, I think it's tough because if we look at the fundamental driver, it's for at least for silver to outperform gold, you need to have rising inflation or rising inflation expectations. And I just, that's not going to happen until the market senses that the economy is going to bottom out. And it's really hard to know. I mean, is that going to be the end of the summer? Is it going to be the fall? It's just difficult to say. So, I mean, I like silver and silver stocks from a value standpoint, but fundamentally, I don't think we're quite there as far as, like a bullish fundamental catalyst. It's just not there yet.
Okay. Let's also move over to the gold stocks then. Let's take a look at GDX. Again, GDX went through a pretty quick collapse here, but then did bounce back, trading more or less right in the middle of that monthly range. Now, the argument has been that the stocks and silver have been lagging gold. What do you see in terms of that GDX chart?
Well, I'm looking at the weekly chart now, and it's the same thing on the daily. But basically, we had a false breakout, we had a crash, and the market rallied significantly, and the resistance now is at 25.26. So after the crash, what happened? GDX rallied back up to 25. I'm looking at the weekly. Then 2 weeks ago, it rallied up as high as 27. Early this week, it rallied above 25, but it looks like, at least right now, it's trading below 24. So looking at the chart of GDX, it put in a very strong low the last couple weeks, but it's struggling at resistance, at least initially at 25.26. So that's kind of where we are. There's this big gap right now that GDX, I mean, it's up today, but it still has to go lower to fill it. I'm inclined to think that at some point GDX could test possibly as low as 20 again or just below 21. That's a level to keep in mind. I'd love to see it. I'd love to see individual juniors do the same thing because I mean those lows on the 16th and 15th. I mean those were some incredible values in a number of stocks, and they made huge bullish hammers. I don't think the market or those stocks is going to go all the way back and do a double bottom. They just had too big and too bullish of a rally. However, that being said, the short-term trend looks to be down, and so that's what I'm looking for to see over the the next couple days or the next couple weeks. If this market can, with GDX specifically, is trading below 24 now, but if that can go below 21, get in the 20s, I think that would be a really excellent area you want to buy. But the last thing about this, Corey, when you have these huge volatile moves in both directions suddenly, after that, then you tend to get range bound action in a market where volatility is going to come off. So I wouldn't expect, any big, huge move up or down here. And the last thing I'll say is you go back to the 2008 low after that, market crash. And that took, I mean, for GDXJ in the parent index, that took 4 to 5 weeks for that to bottom out. So I would not be surprised if, we see another month of backing and filling here in the minors.
Okay. Hey, fair enough. We're still waiting for it, but still everybody, I think, is so distracted in terms of what is going to come next when it comes to news. There's not much more to talk about here, Jordan. We will recap next week with hopefully a little bit more clarity in these charts, but it does sound like we're waiting for a little bit more direction to be shown here. Hey, Jordan, good chatting with you. Thanks for your time today. Have a good rest of your week.